Swollen. Go, Strong. Swollen. Hurry up. Go. Stop. Ready. That's it. You're ready. That's right. Go. Go. Save the swing of the leg over. Go. Oh, the go. Oh, go. Move fast. Hit your muzzle.
All right, get ready to start the morning PT. Let's go. Right in place. Double jacks. Elbows the knees. Go to rotations to the back. Toe touches. High knees. Right in place. Double jacks. Right in place. Done. All right. Good morning, good morning.
Philosophy, and whether you are a day trader or swing trader, it doesn't matter what you're trading, whether it be stocks or forex or futures or crypto, any of that stuff, you need to have some sort of trading philosophy. And I'm not saying that what I'm going to share with you here is the one that you need to have. I'm just going to share with you why these are important and how this one helps me. Perhaps you maybe suffer from or are tempted by some of the same things I am, maybe not, but regardless, either way, you need to have a philosophy out there that's the backbone of your trading. Now, some traders, I could see this being called a trading business plan or a trading statement and variations of that. But the whole idea here is you need to have a foundation from which everything is built upon. And mine, as I'm sure you saw from the title, $500 a day keeps the day job away. And I put this in other video titles, and I'll say this sometimes in my live trades. And I get several questions on it, seeking out some clarification. So I want to just share a little bit more about what I mean by this and how it helps me out personally as a trader. And who knows, maybe it can help you out. So really at the core, question number one. So Clay, you need to make $500 a day. No, absolutely not. I don't believe in setting a set amount, because as soon as you set a set amount, then what tends to happen a lot, and I've heard this happen time and time again. I've been helping and guiding traders since 2013. But people have an amount. So let's just say it is $500. And let's just say for whatever reason, I'm at $460. I'm not hitting my goal. Okay, let me go find something else, and then I need to just make $40. And then all of a sudden, poof, now they're up just $100 or something like that happens. So I don't like having in the, written in stone type goals, because then you introduce the potential temptations of, oh, well, I had a bad day because I didn't meet my goal. No, maybe there just weren't that many trading opportunities out there. And you did have a good day because you didn't force any trades or anything for the sake of some number. So no, I'm not trying to get $500 a day. That's not the goal, because like I said, for those reasons, that's just a little bit too risky, and I don't like having those temptations floated around out there. But the primary thing that my philosophy and that this saying does for me is all about one word: perspective. What do I mean by perspective? Well, I can only speak for myself. However, I get very tempted. I get very, I don't want to say distraught, but sometimes I just like, because you go on social media, you go on YouTube, you go on all these other places, and you see some really big numbers out there. And I'm not saying those people are faking anything. I'm not saying anything like that. I'm not bad mouthing anybody, but you see some really big numbers. And for me, it's, I made $500. I made $400. I made $700. But look at that number. That's got like 2 commas in it. That's got 5 digits in it. And I just made $400. I just made 500. For me, that is a very big temptation. And I'll also be honest in the sense of, because I do have this YouTube channel, because I do run a business. Yeah, I have the temptation of, I would love to have some big old numbers out there so I can sit here and, I don't want to say brag, but just kind of throw out some big numbers. So that's a very real temptation for me. And even if I didn't have the business or anything like that, I mean, for me, it's kind of disheartening when I'm like, all right, good. I had a good solid day. Oh, wow. That person sure made a lot of money. And then all of a sudden I start to have these almost self-doubts in some ways where it's, are you even a good trader, Clay? Should you even trade? I mean, you did that, but then that other person did much more. And for me, it's just, however, how this helps me is, let's actually think about this. $500 a day, just generally speaking, breaks down to $2,500 per week. And then there's 52 weeks in a year. And then that breaks down to a total of, $130,000 for the year. Now, yes. Well, Clay, what about taxes? What about? Yeah, that's all right. You're not wrong. But the idea here, the philosophy here is that helps me build perspective. Because let's think about this. Even if I just only get $500, I mean, $130,000 a year for sitting at home, for pressing buttons, for working maybe 90 minutes a day. Because as far as my strategy and what I'm looking to do, I want to be done by 11 a.m. Eastern time, give or take, which is 90 minutes. Ideally, I'm done even way sooner than that. But $130,000, pressing buttons, sitting in my underwear, pajamas, 90 minutes a day from the comfort of my own home. You know what? That $500 actually looks pretty good. Good for that other person. They made a way bigger amount. But you know what? Considering the circumstances, considering the perspective, I'm happy with that. And that's good for me. That's good for my situation. And this is how it helps me out. It just kind of keeps me grounded in reality. And whenever I feel like maybe being disheartened or feel like maybe I'm second guessing things, it's, wait a second, Clay. Dude, you were pressing buttons online in your, bathrobe, and you made $400 or $500 or $700. Be grateful for that. Don't be influenced by other people. And again, I'm not saying those people are doing anything wrong. I'm not saying they're doing anything fake. I'm just saying that I can sometimes be tempted by that. But this is what locks me down. It kind of takes hold of me and pulls me back down to reality. And think about that from your situation. Now, maybe you have a full-time job, but let's say you have a full-time job and you're sitting there pressing buttons on a lunch break or a break, or I don't know, maybe you're going to the bathroom real quick to do something, and pull out your phone. But we're going to think about that. And let's just say you make $50. Think about that. You just made $50 while at a job that's paying you already, or in any different circumstances. My point here, and what this philosophy is, and what maybe can help you, is don't look at just one single day. Just look at it from more of a big picture. And $130,000 in a year, like I said, that's not too bad from a perspective standpoint. But I started with this and I'll end with this. Again, I'm not saying that I need to make $500 a day. I'm not saying that is my goal, to make $500 a day. I don't believe in daily goals for the reasons already discussed. But when you kind of take a step back and run the numbers out for, again, not a day by day point of view, but from a big picture point of view, it's actually pretty crazy. And it makes me very grateful that, wow, this is possible. I am happy with that. So again, for those other people, congratulations, good for them. But for me, I'm going to stick with my philosophy is $500 a day keeps the day job away. So hopefully that can clarify, my philosophy. If you want to use it, I mean, that's fine. If it can help you out, if it can help you kind of fight off the temptations of feeling that you're not quite as good because you saw somebody else making a whole lot more money, then perfect. That's the whole goal here. Now, before I go, I'm very curious about this. So in the comment section below, do you have any sort of trading philosophy, trading business statement, trading kind of just goal, whatever I don't want to call it, but some sort of variation of philosophy. I'd love to hear the way you approach the markets, the way you kind of keep yourself build perspective and ground yourself in reality. So leave those in the comment section below. If you enjoyed this video and you want me to keep making more like this, then hit that like button. That's the very streamlined way to just communicate. Hey, Clay, thanks for doing these. Please keep doing them. So hit the like button and then also check out the channel as a whole and hopefully you decide to subscribe. Thanks for hanging out. And yeah, get out there.
All right, let's get into our training. Then we're going to get to some live chart markup.
To the next level, because once again, just like we're talking here, we have to become a better master trader in order to experience the kind of financial results that those master traders experience. You see what I'm saying? So with that, we'll get right into this. Now, yesterday and throughout this week, we've been talking extensively about a concept known as price action. Yesterday, we introduced you to the idea of flat tops and flat bottoms. These are moments in time where basically it's just illustrated in candlestick form where price is changing directions. Okay, so each of these flat tops and flat bottoms are moments where price change directions. If we converted this to a line chart, you would literally see the line bounce up and down between the relative top and bottom of the bodies of these candles at each of these levels that we refer to as flat tops and flat bottoms. They're indicated by green candle going up, a red candle going down, and this could be blue and red if you're looking at Go Liberty or Hourglass, etc. The color of the candle is not important. Just you have to know which one is an up candle versus a downward net moving candle. Okay. So each of the concepts that we have talked about this week, whether it be at the flat tops, flat bottoms, bankers candles, M's and W's, etc., which we're going to review a little bit more today, each of these concepts are designed to help you know where to look. Because when you glance at any given chart and you see all these candlesticks going, and you look, for example, at the current live candle, this causes a lot of people heartache. They look at this live candle and they say, I don't know what it's going to do next. They can see in hindsight and they can say, okay, I can see where price is pivoting, and then it pivots here, and then it goes here, and then it break out a retest, and they can kind of begin to make sense, even at a beginner level, of what is taking place. But once they see this, and all they see is this live candle, and there's all this blank space, all of a sudden, the mind goes blank. And similar, and this even ties in with what we were just talking about as far as focus and so forth. If we're constantly focusing out here, what do we see? Nothing. We're seeing literally nothing. We have no reference. It's pure speculation on what price could do. It could go down like this. It could go up like this. It could go sideways. And all of these are potential possibilities. And they could all be, and so, but which one is it going to be? We don't know based upon just looking at this blank space. So what do we need? We need that hindsight. Everybody says, well, hindsight's 20/20. Well, the beauty is we actually do have at least an element of hindsight in trading. This is a huge advantage that we use. I often refer to it as evidence. We're looking at past evidence of what price has done to help give us an idea for what price might do in the future. Now, it's not always 100%. That's why we say might do rather than it's guaranteed to do 100% of the time. I've not yet in all my years of research found a strategy that wins 100% of the time, but that's okay. You don't need to in order to be profitable as a trader. But you do need something that wins at least the majority of the time. And the better you get at each of these principles, your win rate inevitably will improve. And overall, you have that potential to make some great money that you see people making. So with that, let's kind of review a couple of these price action principles and get into a few more examples. I really wanted to expand on yesterday's discussion simply because we covered, I think, like 4 different topics. I had to go through it a little bit fast just because there were so many. And I want to expand on that in today, and as well as introduce some Fibonacci Fibonacci concepts that I think might be helpful to you as well. So with that, one of the things that we discussed yesterday were M's and W's. M's and W's are simply a basic price zigzag formation, okay? Because price is constantly going up and down. Well, if you look at any 4 legs of price movement, 1, 2, 3, 4, those 4 legs can either look like a W like that, or if they're ending in the opposite direction, like this, what does that look like? Looks like an M, right? And so how then does this become useful? And essentially what we said is on the 4th leg, if that 4th leg happens to break to the upside, you can see this becomes a W. And that's even if it has further zigzags in the past. We also, if the 4th leg breaks to the downside like this, and that 4th leg is the longest leg, then we have an M formation. But what this provides to us is that hindsight kind of intuitiveness where we can look to where price was at in the past, and we can expect price to come back up to that general area, and then we can expect price to continue in the breakout direction. And the same would go for a breakout to the upside. We expect it to come back down to that previous middle peak of the W, and then expect it to go up in the original breakout direction. And so knowing that that does occur, we then can begin to look for these moments where we get these kinds of breakouts. And so let's just look for a few examples. Here today, we're on the US dollar to Japanese yen. Now, I arbitrarily chose this pair today simply to introduce something different to you. We're often showing you the euro to US dollar or gold or whatnot. And I like to switch it up and change the pairs on occasion, because people often think if I stay on one pair too long, they think, ooh, that must be the magic pair. And the reality is it's not. There's nothing magical about gold, euro to US dollar, or any other pair. It's all patterns, okay? So US dollar to Japanese yen, we're on a 1-minute time frame chart. So we'll be considering primarily 3-minute trades based upon this chart. Simply following the 3-candle rule. Now there is rationale for other time expirations for your trades, but for the sake of these examples, we'll primarily be looking at 3-candle rule trades. Okay. All right, so as we look at price activity, these M's and W's typically show up during times of kind of short-term consolidation. And we can see some of these by just simply looking for these little box kind of zones where price just zigzags, back and forth kind of in a bit of what we would call a consolidation range. Okay, and we can see these repeatedly, and it happens all the time in the market on every single time frame. It doesn't matter which time frame you select, you're going to see these same basic type of times. And so the reason why these are important is because in order to create that M or that W, you need a few of these kind of waves, these zigzag patterns, before you can end up with a breakout in one direction or the other. And so here we had one of our first ones. We'll just kind of go through a few of these just to give you a few examples. Oops. All right. In fact, we'll start right over here. So price had come up. Let's grab this tool here. So price had come up, down. So we're zigzagging sideways. So right at that moment, we can know that, hey, if price breaks to the upside, we can expect it to come to this level and then continue in the upward direction. If it breaks to the downside, we also have that same kind of level in mind. So what do we end up getting? We have a breakout to the downside, and then the price almost very quickly comes back up to that same price level before then continuing to go down. Now, it's important to note that on these M's and W's, sometimes it can take a while. It can take multiple candles, 4, 5, 10 candles for it to come back up to that level. Other times it can happen very quickly in just a matter of candles. This kind of couples with the micro versus macro scale that we've discussed earlier on in the week, meaning that sometimes it's a very quick retest. Other times it takes a while. In both cases, what we're looking for is the pattern and the retest location, and not necessarily a certain number of candles for it to reach before it retests, etc. Now, generally speaking, I personally like to see a few more candles before I consider it a true kind of breakout. Usually if it's one candle out, one candle in, that's not enough for me to really consider it as a strong breakout. In this case, once price breaks out from here, we have essentially 1, 2, the third candle is the one that comes right back up. It does provide a nice little arch formation. I wouldn't have minded if there was more candles in that, but kind of like you see here, this type of arch formation, that's more the kind of arch that I generally like to look for when looking for breakout and retest like formations. And the logic behind that is because if price breaks beyond a given support level, one of these pivot points, and then it stays down there for, say, 5, 10 candles, something like that, and finally makes its way back up, the fact that it stayed down below shows that there's momentum in that direction. So even without applying any technical indicators, such as momentum oscillators like the RSI or stochastics, etc., we're simply looking for the candlesticks, that price action behavior, to be part of the evidence that we're looking for. And you'll note that all this week, we primarily haven't even used any technical indicators at all. And the reason for that is because I'm trying to train your eyes to be able to see price action very clearly. And then as you learn to see price action, then when you apply the technical indicators from Go Liberty, Hourglass, you're utilizing Cash Trap, boy, you see the price action first in the candlesticks because your eye is trained to see that. And now when you see the other technical indicators confirming that information, you get the down arrow, the up arrow in Cash Trap, things like that. Now it makes your trading so much easier and you're able to make very proactive decisions like you see Taylor Marks and Matthew Thayer taking. Okay, when they're placing trades, do they take an hour to do a bunch of analysis? No, they jump in, they look at a couple of things, they make their decision. It doesn't take that long once you train your eye to see these things. All right, so in this situation, once again, we have our zigzag formation. The price is waving up and down. The fact that it breaks to the downside gives us our M formation. If it had broken to the upside, it would have been more of a W type formation. So we're really just looking at that fourth leg or the breakout leg, you could even call it, to identify which direction we're placing a biased interest in. Okay, and so in this case, the breakout is to the downside. So we know that our biased direction is in the downward direction. So that hindsight, seeing this M formation, seeing the breakout to the downside, now we get to see the past. That is essentially predicting the future. That breakout to the downside gives us this direction. Where's our area of interest? It's at the middle peak of the M formation. Okay, so price comes back up to that level, and then we get our confirmation candle. We've talked in past sessions about preemptive entries versus confirmed entries. A confirmation candle is essentially an example of a confirmed entry, meaning we're waiting for this red candle to form before we take the trade. This is a bit of a luxury type of a thing simply because we get to see it before we take the trade. In contrast, a preemptive entry would be to enter a position or a trade at this level up here, okay, expecting price to drop. The only challenge that we sometimes face is if we don't get the reversal. So if price pushes down but then immediately just breaks to the upside and we never even got a confirmation candle, then we essentially end up losing a trade that we could have skipped. And part of winning in trading is knowing when to get in, but also knowing when not to take the trade as well. All right, and so, all right. So with that, we have this our entry location basically at this level here. We get our confirmation candle here, and how long would we take this trade for? 3 candles. So our entry would literally be at the close of this candle. So we can say with perfect transparency, in hindsight, even when you're doing back testing, things like this is very important. We can say, no, our entry would be right at the close of the candle because that's the rule that we're following. And we would know how long we could take that trade for 3 candles. So 1, 2, 3, price closes down at the base of this candle. So we can say, even in hindsight, when we're back testing, that this is what would happen with that trade based upon following a simple M and W formation pattern. Okay. All right, so next, price pushes down. We win that trade. And we actually got another one here. So price comes down, pushes up, comes down, and then also we get a breakout to the upside. So now if we're kind of following these zigzag patterns, we immediately get this W formation beginning to form. And you'll note, hey, we have a few green and red candles in this area. And this is the kind of the micro versus macro scales concept that we talked about, I believe, on Monday, where we're kind of averaging those out. We're saying overall price was moving up during that time. It definitely pushed beyond this level here. Okay. Here is our flat top of that peak. That kind of gives us an area of interest, an ideal location where price will likely come to. because that's where price turned around. If we changed our chart to a line chart, you'll see that the line comes literally right up to our line there and then goes down. So that's why those flat tops and flat bottoms are useful. So price breaks above that. So we expect price to come down to it. That's where we get our entry opportunity here. We have our confirmation candle, and we take this trade for 3 candles. Where's our entry? At the close of this green candle, 1, 2, 3, price closes at the top of this green candle, we would win that trade. And so we keep watching. We say, okay, it looks like we're in consolidation again. Price is zigzagging, and boom, we have a breakout to the downside. So now we have our area of interest. Note how this is a flat bottom. So let's put a line on here at that level. And that's our area of interest. So price breaks out. And look at how many candles it takes on this example. Okay, on this first one that we were talking about, it took 3 candles for the retest. Well, how long did it take on this one? As price pushed down below this level here, it really hung out down there, right? In fact, it gave us other W formations at the same time before we even got our retest of this M formation. So our first retest was at this location here. Here is our confirmation candle, this red candle here. So our entry would be where? At the close of this red candle, 1, 2, 3, price closes down at this level here, and we would win that trade. Note how we also ended up having another W formation. And I don't know if you could see it, but price had come down, zigzags. So here's kind of our short-term consolidation phase and a breakout to the upside. So where is our area of interest? Where's our ideal entry location? Here is our flat top right there. So if we put a line on that, simply wait for a retest to that level. Price zigzags some more, comes down to this level. Here's where the retest occurs, and here is where our confirmation candle is. We would take this trade at the close of this green candle. And this is all, again, just based on M's and W's. So if we were following the zigzags, because the breakout was to the upside, as we see here, what does this become? Our W formation. So we're looking for an area of interest or our entry location at that middle peak, ideally at the flat top if it's a W, or a flat bottom if it is a M shape. And so we can look for a call option at that point. At the same time, and this illustrates how multiple opportunities can present themselves. Well, what was price doing while we were waiting for price to come down to retest that level? It was creating another short-term consolidation zone. Okay, and so all of a sudden we get this nice big breakout to the upside of that level, and so here's our middle peak there, and so that's where we're looking to enter. In this case, it only took about 4 candles to come back down to this level before we get yet another opportunity, right? And why is that our area of interest? Because this is the middle peak of our W formation. Now, at first, you might get thrown off by a few of these other alternating candles that you might see and say, well, is that the middle peak? Is this the middle peak? And in the beginning, that's just something that you kind of have to train your eyes. And this is why I shared the idea, the concept of the micro versus macro. Because it is true that each of these alternating candles is a short-term price pivot point. If we go back to our line chart here, you can see that during some of these moments, like here and here, those are short-term. These are micro pivot points, but you can see the same concept even applies. For example, if we zoom in on this, what do we see? This essentially was a short-term W formation. Price breaks out to the upside. So where does it retest to? That level there before then going up. So it works on a micro scale versus macro. The micro is just often harder for people to see. So what I would encourage you to do is to focus on the macro scale. Look, the more obvious price changes of direction, and utilize those as your primary areas of interest, because both will play out consistently. Okay. And as you can see here, how many trades have we taken? So we had one here. That was our first one. Price, let's see. Then we had our second one here. That was 2. Then we had one here. I think, no, yeah, it was this one here. That was 3, 4, and then 5. Okay. So just in this short little stint, by following simply M's and W's, that concept alone, which is a price action pattern, we've won 5 trades in a row, taking every single opportunity that we can see. Okay. That is very, very powerful. All right. And it just continues to do it. So up here, price has come up, starts to zigzag sideways, and then it breaks to the downside. So here's our area of interest. There's our nice flat bottom. Let's put a line on there. Has price come back up to it? It has not. So we haven't yet had a retest to this location. So we'll just wait endlessly for that. Sometimes price will just go in a given direction and we don't get a retest to that location. That's okay. So what we do instead is we then just keep following these zigzag patterns. And like if we were looking at price currently, what do we see? Price has gone into a bit of a consolidation range. So what are we waiting for? We need price to really break out either to the upside or really go out to the downside. And that will determine our next trade opportunity based upon this basic price action principle. And where would our areas of interest be? Our target entries? Well, if price breaks out at this moment in either direction, this is our most recent flat top. Right down here is our most recent flat bottom. So those would be the areas of interest. So if you saw price break out to the upside, as we're waiting for price to come back down to this level, in fact, price could come all the way back up there. But ultimately, we'd be looking for a call option at this level after we get a confirmation candle. If price breaks out to the downside and comes back up, we'd be looking basically at this level for a confirmation candle, predicting that the price would go in the downward direction. So you can see that trading as a whole really provides repeatable patterns that we can identify, that we can see in the past, as well as project into the future. And so this gives us the ability to not prophesy the future in a magical, philosophical way, looking in a crystal ball. We're not doing anything magic here. We're simply following concrete past price patterns, looking for areas where price has already shown us where it has changed directions. The middle peak of any W or any M or whatever is a location where price has in the past already shown us where there's some resistance. All of this couples right in with the idea of support and resistance. Support and resistance is just saying, where's price struggling to go through? If price is kind of ricocheting back and forth, up and down between two given levels, that essentially is overhead resistance and underlying support. And so you can call these price action levels, pivot points, flat tops, flat bottoms. There's a lot of terms or names that we can apply to the market. But at the end of the day, it all comes down to one simple thing, and that is price movement. All right. And so as long as you understand what we're talking about when we're talking about these different areas where price changes directions, these pivot points, and you become more oriented, this skill above all other strategies, okay? Because what we're talking about here, this is foundational principles for trading in general. No matter what you trade, if you trade stocks, if you're looking to do long-term cryptocurrency trading, no matter what you're doing, these principles will help you tremendously. And so as you apply them and get good at them, ultimately then once you apply a strategy such as cash trap, such as Go Liberty, such as the strategies found therein, such as simple scalper, pickpocket, or web slinger, now those technical indicators will only help you and not distract you. They're designed to help you. Just as when you go skiing, if you're familiar with the sport of skiing, you ski on what? Skis. But what are you holding in your hands? You're typically holding some ski poles. And those poles are not what you're skiing upon. If you were without your skis, you'd be in trouble. But you could actually ski without the poles. So skiing without the poles is kind of like following price action. You can do it and you can have a great time. You can be successful. But what do the poles do? They provide additional stability. So when we go into Go Liberty, for example, or into Hourglass, in either of these, and we look at the technical indicators that these strategies include, ultimately, these technical indicators are like the ski poles. They're designed to help provide support and further confirmation for what you're already seeing through price action itself. For example, right here on the British pound to Canadian dollar, we're on a 5-minute time frame chart. Let's thicken this line so you can see what I'm drawing here. There we go. What do we see? A little bit of consolidation pattern, boom. Breakout to the downside. We're looking for a retest in that area. Price comes up, get our confirmation candle. Beautiful put option opportunity. It's that simple. So you can see the price action first, But then what do we also see with some of these technical indicators? We can see other evidence of the price staying below the middle moving average lines, things like that, that will further confirm that, yes, we're in a downtrend. We had a nice overhead resistance line, that red line up here, showing that price had some overhead resistance that it was running into, that might suggest that price was going to continue in the downward direction, things like that. So each of these technical indicators, no matter which you choose, which you prefer, which strategy that you utilize, whether it be simple scalper or whatever, all of them are designed like the ski poles. They're designed to help you as you're going in your trade decisions, and not necessarily to be the skiing itself. Price action is first and foremost what you want to be looking for. Look at this one. So here's the British pound to US dollar. This is a 60-minute time frame chart. Here on the simple scalper, what do we see? Price pushes down, begins to consolidate, breaks out to the upside. So where's our area of interest? This area here. Where does price come down to? That level there. And what do we get? A beautiful call option move. It's so simple. It's ridiculous. Okay, and it's on every time frame. It's on every currency pair, commodity. Doesn't matter what you want to trade. You're going to find these principles will be consistent. And so the key then, where do we go from here? We have to master price action as a foundation for your trading. This will help you to identify market phase. Are we in trending times? Are we in consolidation? The answer is you're often in both. For example, during this time here, we would generally call this an uptrend, where price is moving in an upward direction. But what we're really experienced is consolidation, a breakout, retest, which is a trending like type setup. So we can look for a call option opportunity there, but it also just goes right back into consolidation, breakout, retest, breakout, consolidation, breakout, retest, breakout, consolidation. So it's constantly, in a sense, going from one phase to another. And utilizing this kind of simplistic M's and W's type of an approach allows you to kind of orient yourself with which phase that you're in. It all leads back to all the same concepts that we always talk about, slightly different ways of seeing it. We can call these pivot points, M's and W's, whatever you want, but ultimately the concept is the same. Your ability to then apply these principles and stay in tune. Because the first question you should be asking yourself as we review the three-step objective trade decision is, what phase are you in? Are you in consolidation? Are you in trending time? If one way to apply today's principles to that concept is to say, are we getting repeated, in a sense, waves or zigzag movements that are relatively close to each other? So in other words, are these up and downs, do they have the same relative top and bottom? If the answer is yes, you're in consolidation. We can see further confirmation of this principle by looking at the Bollinger Band, which is a tool that we use in Simple Scalper as well as in Cash Trap. And you can see the price crossing over the middle moving average line repeatedly. So what does that further confirm? That we are, in fact, in consolidation at the current moment. The RSI, currently between 40 and 60. So what does that tell us? We're currently in consolidation. So so we just can quickly utilize these technical indicators to confirm which phase we're in, but the price action alone kind of told us what phase we were in. And so anyway, take home message for today as we discuss these concepts is to really get good at identifying where price is changing directions, combine concepts, look for those flat tops, flat bottoms. If you see an M or a W, say, okay, well, if this was a W formation, we had a breakout to the upside, we want to look for that most recent flat top, because what is the rule for our flat tops? If price is currently above a flat top, it's likely to come back down to it, retest, and then continue in the direction of the breakout. If it's below a flat bottom, it's likely to retest to that location and then continue in the breakout direction. So we can begin to follow these rules repeatedly and find consistency in our trading. The last thing I want to cover today that I mentioned is Fibonacci.
Okay, I want to stop it there. I hope you guys got something out of that, because I primarily trade off the M's and W's, but I normally do head and shoulders pattern. The head and shoulders pattern is a little bit different, I see, from the M and W. Emma, you asked me about this the other day. So the M and W they actually get in a trade a little bit later than what I did with head and shoulders. So it's a little bit different because they wait for a confirmation candle. And with head and shoulders pattern, you don't do that. You buy it the right shoulder. So it is a little bit different. So I may have misinformed you on the direction of the M, as you can see in this video. But that's why I put it on here because I wanted you guys to actually see this yourselves. If you look on the top, that's the name of the video right there. So I highly recommend you guys go back and watch this video more than once and practice this while you're watching it. Maybe pause it and then go to the chart and see if you can find those patterns because they're gonna make a difference in your trading. Like it just showed us that you can clear 5 trades on one chart without even going to another pair, which is phenomenal. You ain't necessarily got to go to 10 pairs to find your trade entries. You trade 5 trades, you clear all 5 of them, you're done for the day pretty much, depending on how much you leveraged. So, any questions on the video, guys? If not, we're gonna move forward. Okay, so what we got to do next, everybody, because we only got one more day. Tomorrow's the last day of boot camp. So tomorrow, everybody's supposed to be tasked with sharing their screen, marking up a chart, calling a trade. That's how you're supposed to exit boot camp. But today, what I want to do for the next few minutes is everybody have opportunity to find MW patterns and look for a trade setup. So not necessarily me just scrolling through looking for these patterns. I want everybody to take a turn. If you're able not at work, to share your screen, look for a pattern and call something out. So anybody want to go first? Let me stop sharing and let you guys be able to share.
I'm on the Zoom on my phone, but I'll look at it on my computer.
Okay, no problem. MJ, you want to share your screen and look for some patterns?
Yeah, bro.
Okay, no problem.
You can see my screen?
Yes, sir.
I was just looking at the chart. Hey, you see this pat right here? I got it.
Mm-hmm.
Is that an M pattern?
It is.
So when it breaks down neck, that's when you enter, right? Well, like what I got that line.
Right. Well, don't make it big. I can see it. So what you're gonna? You see that? Like you drew the line on it. Is that a candle? You saw you got your line coming all the way down. Is that a candle there, or is that just a line?
Hold on, let me clean it off real quick.
Okay, got you. Yeah. So basically, with that M pattern, it didn't come back up yet.
Okay.
So the way they teaching it is that you wait for that candle, confirmation candle to come back up. So in this particular instance, all it did was kept dropping.
Okay, so you wait for the retest.
Yeah, that's the way they're teaching it. Wait for the retest on that confirmation candle. Get in at the close. See, I normally get it at the open.
Can I show him? If he looks a little bit higher than where he is right now, it looks as if another M had formed a little bit higher. So if you put right, so there's a kind of M there as well.
I see
and if you look at the wicks, the price did kind of come to the bottom of the middle wicks there and then work back down. So if you go to the wicks in the middle of the M, price came right there and then broke back down.
Okay.
Yeah, I see what you're talking about, like right here.
Yeah.
Yeah, draw it on that one, MJ. Let's see if we can find it on that. Can you draw it on that one?
Yeah, I got you. Probably can do this and put the zone around it.
Well, no, I want you to draw the M pattern like you did on the other one.
Oh, okay.
Mm-hmm.
And it came back, the retest, I think, right there.
Yeah. Well, close enough, but yeah.
Well, yeah, that's what I'm saying. See, so what they're showing is that if you look maybe 1, 2, maybe 8 candles down, it almost touched the line again, right in the middle of the chart.
Mm-hmm.
You see that wick? Did it almost touch the line?
This one right here?
Yeah, right there. Yep. So that's what they're saying. They're saying wait for that to come back up, and then the confirmation candle will be the next one. When that one closes, that's when you're supposed to get into the sell, based on their theory.
Okay. So they're saying just before you hop in, wait for confirmation.
Yeah.
The next candle.
Yeah,
Okay.
and I mean it does make sense, but I think with this strategy, you got to really practice this strategy to get it down
Yeah.
pat. Because I'm so used to waiting for a price to come to my zone or actual horizontal line, then I take my trade. So it's a little bit of it's not the way that I trade. That makes sense to you guys.
Yeah.
But I think with practice, though, I think this may be a game changer if you can master this strategy along with anything else you already do. Because I honestly don't wait for confirmation candles, but I mean, if you can confirm something, how could you lose? You know.
Yeah.
So I definitely think it's worth trying. And just waiting, basically waiting for the market to come to you. So I think in this example, waiting, setting my alarms will definitely help because you don't know how long it'll take for that market to come back to that level to give you a retest. So this thing is just making all kind of patterns.
Okay. So do a chart markup or that's it?
You can if you want to.
Yeah, I want to do it
Yeah,
since we got one more day.
Mm-hmm. Also, if you guys can send me a picture, I'm gonna make the certificates for tomorrow as well. You can just send them to me on Telegram on a private message.
What picture, bro?
Any picture of yourself to go on the certificate of completion for boot camp.
Seeing an M formation on OddCAD. I don't know if you want to pull it up on your screen, Ron.
Okay. As soon as he's done, I got you.
Go ahead, you can share it. I'm gonna mark my chart and then I'm gonna share when I do it. Go ahead, you can share your screen.
Which pair is it, Emma?
OddCAD. So like
here?
it formed that, yeah, so it formed that M. And if you go to the base of the middle, look how many times it kind of wicked and then came back down there.
Yeah, for sure. Let me get the brush tool.
Oh, that touched that zone a lot of times. Could have cleared 1, 2, 3, 4,
Cut the
5,
head off.
6.
The head is right there. So let me make that bigger. So broke through. Here's the retest right next to it. Confirmation candle. Get in right there, he says, and then 1, 2, 3 candle rule, you clear the trade. That's it. So this is the Let me just put an arrow right here.
What do you mean 3 candle rule, bro?
The way they teach a 3 candle rule. So that's like almost like a 15-minute trade if you're doing a 5-minute trade, or if you're doing 3-minute trades, that's a 9-minute trade, right? So he's
Okay.
saying you get in here at the bottom of this close because this candle, because this is your confirmation candle. You get in here, you got 1 candle, 2 candle, 3 candle. You see where it closed at? It closed below this candle. And make it a little bit bigger. So
If you look at it, maybe we might catch, well, look at it only 1 minute, Vaughn. So you see how it the M now forming there on the 1 minute. So it hasn't really come up to that 834 level as yet.
834?
Yeah.
Maybe we're looking at 2 different things. I was looking at this M. You looking at a different M?
Yeah,
You're
this
looking at
last
this
one
one
right here forming to the on the NNN. Right, that M there.
Okay, I wouldn't look at it on the 1 minute though.
So if it touches like maybe 834.
So on this one, it broke off to the downside. So we're waiting for it to come back up.
Yeah.
But
So
the bottom of the M is here though.
834.
Huh?
Well, I did it as the flat top, flat bottom. So the flat bottom is at 834.
Yeah, right here. And put the line at the bottom. So we're waiting for this to come back up to touch this line at 834. That's what you're saying?
Yeah.
Mm-hmm.
Well, based on what I gathered from the video.
Yeah, you're exactly right. So for me, I would just set the alarm like right there and just wait if that comes back up.
Right.
But I was just talking about over here because we can actually see what occurred already.
Okay.
Yeah, he was asking about the 3-candle rule. So that for me, that'll be difficult to. Well, it's going to be challenging to wait for the confirmation candle, but I'm going to try it out today and see if it works.
Yeah.
And the 3-candle rule, it did close below that, but if I'm taking 4-minute trades, that's like a 12-minute trade.
Well, if we're looking at it only 1 minute, then it'll just be a 3-minute trade.
Yes or no? So that's what I'm saying. I got to test it out and see how it works for me, based on the way I trade, to see if it works in 4 minutes or not.
Yeah.
I won't know that until I test it. I can't say yeah it's gonna work and I ain't tried it out. I don't want to do that, mislead anybody. But I'm gonna give it a shot today and see if it works. I'll definitely put it in the chart markup group. How I did. MJ, you want to do any more practice with this M and W patterns?
Wait, what you look for a pattern? You mean?
Yeah, you want to look for another one on a different chart?
Yeah. Okay.
I can stop sharing if you want to.
Can you check my markup real quick, please?
Yeah. Mm-hmm.
Do I need more, or this I should be good right here? Because I noticed that when I put more, I get confused. So I chose to like stay with the current price.
Uh-huh.
So put them on. If this breaks right here,
Mm-hmm.
it might come to this right here because this way it started from.
Yeah, the only other thing that I would say is like you see around the 650 range,
Yeah.
If you
Right
look
here.
left and you see a bunch of candles that's like resisting, I would look all the way left to see if that's a real level of resistance. That the market could come back up there. If it doesn't, I wouldn't worry about it. But that's the only other thing I would see, like in the middle there. There's a lot of resistance in the area. Other than that, that's about it. That's all I see. That I would put a line at, you know.
Yeah.
Other than that, you're good.
All right, that's all it.
Okay. Good stuff.
So we're looking for M and W, right?
Yeah.
I'm gonna let you take the screen, and when I find it, I'm gonna let you know, bro.
No, you're supposed to find it live.
Oh, that's what I'm supposed to do.
You trying to cheat. Let me go on my own little huddle and find these patterns.
I got you.
I'm mining OddCard to see what it does.
Oh, you did? Okay.
I just keep looking at it.
Okay.
I want to see what it's doing.
Yeah, me too. Why you switch to different pair? You didn't see no patterns on that one? I did.
Which one?
You was on GU, wasn't you?
Yeah, I was. A minute. Yeah.
Okay. You don't see any patterns there? M or W's?
Okay, I see what you're talking about.
Yeah, so what you got to do, man, is really, if you just draw the M on your chart and draw the W on your chart in a blank space, right? And just draw it out. And then that's a reference. Now you can look at the W pattern and then find it on the candles. So what I'm saying is to take your cursor, see that big open white space you got there? Use the brush tool and just draw M and then draw a W and then go look for them. And that'll help you, because that helped me out when I look for head and shoulder. I had to draw the head and shoulder pattern all day long. Then I can start seeing the pattern with my naked eye.
Okay. Would this be W right here?
Looks like a W, yeah.
And it got one top. That's a true top, right?
It is, but the way they're teaching it, you want to find your flat top and bottom and put your line there, and then wait for that joker to come back to that line, and that's your retest.
Okay. I think that would be more of an M rather than a W, because he said if it's a W,
he got to draw it out though. Yeah, but he got to draw it. So once he draws it, then we can see what we got.
You talking about that?
Yeah,
okay, now you got an M. But if you look left one more time, it looks like a W. If you start from right there, that's a W. But it depends on where you start at.
It can be both, right?
Yeah, that one could almost be both. But like she said, it broke down. So in theory, that's an M.
Yeah. So you wait for it to come back?
Well, you have to wait and see what the market's going to do. So it could have been either way. But in this instance, it's an M because it went down.
This strategy going to take a lot of patience.
Exactly. Yes. And a lot of drawing, really drawing it out and just seeing what it does. But I think if you master it though, it's a game changer.
Yeah.
So right there, the one you just drew, MJ. So put your line at your flat bottom. Okay. Yep. Now after your M formation, put an arrow on top of your candle that came to your line, your retest. Which line is your retest?
This one right here. Right?
Well, no. That broke through.
Okay.
That's your breakthrough. Now you wanted to retest the line. So which one of those candles is your retest? Well, just put a little arrow above your retest candle.
shoot.
Okay, let me help you. All right, so you see how your M, it came through, right? The red engulfing candle broke through, right?
Yeah, here, right?
Yep, the market went all the way down, like 15 candles. Then you got that
Okay.
large blue candle that came back up. See how it
This one right here?
retested? Yeah, it came through your zone, but that's a retest, right? That's your retest candle. The one to the right is your confirmation candle. It turned red and it went down. Now, what they're saying is that you're supposed to get into the trade at the bottom of that candle where it closed at. That's what they're telling us to do. And if you count 3 candles over, you should be good to go as far as clearing that trade. But in this case, 1, 2, 3, yeah. If you look at the third red candle or the second red candle, it's below that second red candle. So you would have cleared that trade. You see that or no?
Yeah, I see right here.
Yep. So that big blue candle, that's your retest candle. The one next to it, that's your confirmation candle where you get in at. And then your candles over from that, the red one, that's your clear.
Okay, I
so
see.
You see that wick? Yeah, the wick would have brought you way down to the bottom. Like I said, man, this strategy, you're going to have to really test it out. But I see exactly what they're saying. You're just going to have to draw it over and over and over again, really look for these patterns. And like Emma said, sit there and wait and be patient for it to come back.
All right.
Yes, great job on that, man.
Yes, sir.
Emma, you see anything else? I know you can't really draw anything.
Nah, not yet.
Okay. So here's an M right here. Yeah, it came through confirmation. I'm gonna try this out. Because it actually makes everything look so simple.
It makes the risks low.
Yeah, exactly. Yeah. That's why I said I'm gonna give it a shot. I mean, this could, like I said, this can really change. I'm already using head and shoulders, but you know, with this M and W, that may be a game changer. Let me just show you guys the head and shoulders. So what I'm saying, MJ, like this, just draw your pattern out. That way you have a reference right in front of you. So like with the M, do the same thing. Just draw it out. I'm gonna draw my W. Not the prettiest M. Now if I see that here, I'm like, okay, here's my reference. Look over here for that same pattern. And that'll help you get better visualizing. So pretty much I practice this all day long, just drawing the pattern out. And then I look for it. So with the head and shoulders, you get in here or over here and you buy it up, you sell it down. With the M, you wait for it to come back up, confirmation, then get in. So it's a few more steps out beside the head and shoulder. Head and shoulder don't have that many steps to it. You just buy at the right shoulder or sell at the right shoulder. So that's the difference between the two. But I do see.
I feel like this 3 candle rule, I feel that might throw you off.
It might do what, Emma?
The 3 candle rule that he's talking about.
Uh-huh.
I feel like if that will I don't know. I find usually when he counts 1, 2, 3 candles, I find sometimes it's very, very close to where you would have gotten in.
Yeah, that's what he keeps saying. He said that was real close. And sometimes real close on TradingView, on your broker, you may not clear that trade real close.
Correct.
Because sometimes it's a couple of pips off. So yeah, that's why I say I want to see how this works out. Because if I count on these, sometimes these candles, you're right, it's like 1 pip under your entry. So that's why I say for me, that's going to be kind of mind-boggling to wait for the confidence and then get in at the close of the candle, not way up here where it hits your zone at the bottom. So that's like, okay, but I get it because now it's actually going in that direction. So I do get that. Yeah. So I think today was that training is great. So if you guys want to rewatch that, I recommend that for real, and maybe watch it a couple times until you get it down pat.
For sure.
Yep. So great training today, you guys. Don't forget to send the photos so I can make your flyers or the certificates today. And then tomorrow we're not gonna have any video. We're just gonna do strictly chart markups and calling out trades.
All right, cool. Sounds good.
All right, guys. Y'all have a great day.
You too.
Okay, you too.
All right.
Bye.
All right.